Good morning, everyone, and welcome to the European crossover webinar. And we've seen the dollar going and pair back post-Powell comments. One of the things we were looking for at the beginning of the week, if you remember our Asian analysis at the start of the week, was on the dollar index. We talked about, we even had a parallel trend line here, all kind of gearing towards the market testing the pivot. We're looking at the 2-hour chart at 96.08. And we thought we'd get down there, probably see a little bit of a bounce. Well, we dipped beyond that and saw a hair of a bounce. Now we're starting to test a little bit lower here in the cash dollar index. We do have some additional support if you check our analysis around 95.80. We've got that set up in our basic technical. We touched on a few markets there. But certainly a little bit of a complexion change here for the cash dollar index. And look at the dollar yen continues to go on and ease back. After that, jump that we saw here where we're able to take out those. And one of the things, that was another thing we had talked about in the basic technical analysis at the beginning of the week. Let's change this back. Just one moment. We were looking, we figured that this market wasn't going to be happy and took it, even though it was treading water, until we could take out those 111 stops. We thought we'd make it up to 1144. Thought once we took out 1103, it was going to be a straight shot, at least to around the 1135-ish daily close level. But we topped out at 23 and we quickly rolled over, and we just have not been able to see, get a move back up. I thought we would have probably popped up maybe into the upper 70s or whatever, but here we are rolling down to 38 now. And of course, the big mover, what can you say? It's got to be cable here. We start out the week looking pretty good here. Remember, on the exponential moving averages, we had talked about if we can get past this 29.89, we came back. We had already talked about from the prior week back testing the 50%, and boy, look at how we have really come off and just taken off after just pairing back here to that same 29.89, which was that same breakout area. Remember that? And that was actually also, I believe it was a 38% of this move. We came back, took that out, retested back here, and boy, have we seen a strong clip. We've made it up here to this key daily area here, which is 32.68. We'll pull that back. We've also got this covered in the Asian analysis, which I posted, and we'll cover some of those once we get past the news. If we can get past this 133, we'll cover that too. We're looking for the market to probably take an ease right around here, but we'll get to that in the Asian analysis when we go in, or when we prepare for the analysis. That was covered in the Asian analysis also. So we'll cover the overview in the charts, but obviously the dollar really kicked things off with the dollar yen. Boy, has this really weakened. I guess it's starting to relinquish based on what the dollar's doing at this point. And certainly the cable, the big mover, and euro. We finally broke out a little bit higher in the euro. Remember we had the 1392. I believe that was our bias chart resistance. 1392. We actually got above here and we took a dip. We started sliding back as the dollar started to recover a bit, and we've kind of put back ourselves up a little bit higher, but we're not above 114. So let's move on to the news. Before we do that, let's take a look at where we stand here as far as economic reports. We did have Italian business confidence, which, surprisingly is doing okay considering with all the woes they've got in Italy. As we're moving lower, we'll have a Swiss zoo, which came in much lower. It'll be interesting to see where the Swissy is. And then coming up at the top of the next hour is going to be Eurozone sentiment coming up here. Now, as we roll into the States, big news here today in the Canadian CPI. Boy, that'll be a mover here. And we didn't even mention the Canadian dollar. And we do have that also in our Asian analysis too. And got some comments on how the Canadian dollar has reacted, as well as we do have factory orders, durable goods. That's going to be at 10 a.m. Eastern. and of course EIO oil stocks. Without further ado, let's just go on and move into that. Speaking of, let's go on. Morning bid, Simples, Brexit fog remains. Simples was how Theresa May summed up the route through the Brexit morass in Parliament on Tuesday. It was probably the first time a British leader had used a slogan of an insurance-selling TV meerkat to anyone or to analyze a political crisis. But the state of play is not that straightforward. True, by holding out the opinion of a delay to Brexit, she's probably achieved her goal of preempting the ministerial revolt that had been looming in today's Parliament votes on Brexit arrangements. And the prospect of delay has solicited a mild sigh of relief in financial markets, with analysts trimming down the probability assigned to a no deal. But beyond that, there's no clarity, and still the prospect that March 29th will just be replaced by a new cliff edge at the end of June. Hardcore Brexiters will meanwhile lobby for conservative lawmakers to vote in favor of retaining the no-deal option in a vote due mid-March. And after European Union officials seemed initially receptive to agreeing to the idea of a short delay as proposed by May, French and German officials have come out this morning saying it would have to be clear exactly the point of the delay would be. That implies the EU could play hard to get, possibly setting conditions for agreeing for an extension to Article 50. Such considerations will no doubt be discussed by France's Emmanuel Macron and Germany's Angela Merkel when they meet in Paris today. Moving on to the markets. World markets remain buoyant on Wednesday, largely encouraged by Fed Chair Jerome Powell's confirmation of the Fed's pause in monetary tightening and plan into its balance sheet rundown. But that's been in for markets for weeks now. No stocks and bonds had a little additional fuel. Sterling continued to be eyed closely, extending May's gains against the dollar and euro, the first thing after UK May planned to offer Parliament a chance to vote against no deal and extend the Brexit debate if withdrawal agreement doesn't pass her by March 12th. While the permutations and combinations of outcomes still remain hard to fathom, markets at the margins at least see the latest gambit as reduced by the chances of what they see as a worst case exit with no deal. Deutsche Bank, for example, cuts the probability of no deal to 10% from 15% and lifted its chances of a second referendum and new election by 5 percentage points to 10% and 20% respectively, as its most likely scenario remains that May gets an amended deal through the Parliament by the end of next month. Elsewhere, European stocks will mark lower as corporate earnings ground on, and upbeat consumer confidence readings from France on Tuesday were watched closely as opinion polls showing Macron's approval rating improving and support for the yellow vest protesters wavering. So let's go and move on. Canadian dollar strengthens as Fed patience bruises the greenback. The greenback is down across the board, said Ronald Simpson, Managing Director of Global Currency Analysis at Action Economics. Crude also settled 2 cents higher at 55.50. Moving on. Over coming days, Canadian markets will watch domestic economic data. Now, we do have CPI day today and could guide expectations for next week's interest rate decision by the Bank of Canada. I don't think there's going to be any decision made there, so that may kind of keep a little bit of an undertone bid for the dollar CAD for now after quite a bit of a pullback, but we shall see. Canada's official inflation report for January is due on Wednesday, and fourth quarter gross domestic product data is due out on Friday. That will be big. Moving on to the Australian dollar, it slips on disappointing data and the Kiwi near a 2.5-week high. The Aussie dollar slipped to 71.80 as official figures showed the value of construction work done slumped 3.1% in the December quarter, confounding expectations for a 0.4% rise. Australia's construction activity will be a drag on the GDP, ANZ said in a note. While there's a considerable amount of work in the pipeline for public offering and residential construction, the weakness in the second half of 2018 has been more marked than we expected, the bank said. And if this points to an earlier and sharper turn in the cycle than we expected, it would suggest downside risk to our outlook. The Aussie has become more sensitive to macro data, such as the RBA opened the door for a policy easing this month, effectively abandoning its long-held tightening basis. And moving on to the BOJ, a dissenter for the BOJ ramps up the stimulus to hit the price goal. Bank of Japan Governor Goichi Katoka said on Wednesday the central bank must ramp up monetary stimulus to achieve their inflation target. Even if monetary policy is loose, it would take a very long time to achieve our price target if fiscal policy is tight. Katoka said in a news conference, well, it hasn't made any change here. The dollar yen is even lower right now, and obviously subsequent, to what's happening with the dollar. Speaking of which, the dollar's on the defensive after the Fed comments and starting advances. The dollar remained near a 3-week low on Wednesday after the Fed Chair Jerome Powell said the central bank would stay patient on monetary policy. The dollar's fall was a little puzzling as Powell's comments did not offer fresh insight, but the market was in a state where the dollar was sensitive to potential bearish factors, and a strong pound also weighed, said Masafumi Yamamoto. Sterling had rallied on Tuesday after TMA ordered lawmakers a chance to vote on a delaying Brexit, opening the possibility of voting a chaotic no-deal departure. The Aussie dollar was a shade higher at 71.95. The Aussie was hurt at the start of February as the RBA opened the door to the interest rate cut, as we mentioned a few moments ago. Differences in monetary policy are less of a driver for currencies after the Fed shifted to a more dovish stance and prompted other central banks to follow. Risk appetite is now a key incentive, and currencies like the Aussie benefit from the risk on, said Yamamoto. So that takes care of our news, and we're going to move in right into our analysis. So let's go and take a look what we are. We'll start with the euro. So here we are on the basic technical, and the euro closed under the key daily level, just under the key daily level of 1392. Exponential moving averages are close to generating a buy signal. That's on the daily EMAs. Upside challenge is 1445 with a newfound momentum. Support is going to be 1360. So let's go and take a look where we are right now. There we go. So we're not too far away. We could, if we can push a little bit hard, could potentially generate a buy signal maybe as early as tomorrow. But we're certainly working that way. We're fairly close here on the euro dollar. We talked about this area here. That was our bias chart resistance from yesterday, which was 1392. We certainly made that run, but as you can see, we closed just under there. Had we taken out, and you can see the significance here of the 1392 on the daily. Look at that coming across here. You see that? And why these touches are so important. I know, like I said, my analysis is sometimes, rather simple. It's not complex and have a lot of chart patterns, but I go with the touches, key levels, try and look for some momentum. But you can see how important they are here. Look at this 1392 right here, right in the middle here, the touch here, the high, the high, the high, the low. And you can see here the market made a stab above, but could it close above? That was the ceiling deal, and it could not do it. So it opened the door actually for the market to kind of edge back, which it did as the dollar bounced back. But can we get that, what we call newfound momentum, to push higher? Well, if we can, you can look on a 2-hour chart and point at different areas where you think maybe the euro dollar could, ease back just a bit from another key level. Obviously, 1406 is looming just above here. You can point for different other areas here. And certainly we made this run up here to what, 1403, came up shy of this 1406. But where the rubber really meets the road is going to be right there. We're showing it coming in right here around, right there, 1444, but on the daily, it's actually 1445. Look, in the meantime, you can take out 1406. You might even come up here to around 1429, which is pretty key. But where the rubber meets the road is going to be 1445. That's where is going to be the arbiter of, is this thing going to move with some real sustaining momentum? That's really going to be mainly based on the dollar. Really, this is not about the euro. I hear some people talking about some differentials. This really, in my opinion, has nothing to do with the euro dollar. Everything's being driven by what's happening here in King dollar. Okay, so that's the only thing that's making a difference. It has nothing to do with the euro. The euro, you can even see it for the last few days, has not really done anything, as it's been stuck in neutral, and the euro itself has not been a driver. It's just basically as I mentioned before, the euro dollar compromises 56% of the cash dollar index. So if the cash dollar index is moving lower, the euro basically has no vote in this matter to speak of. It's just going to move up by default. Okay, so we've had a lot of reasons where the euro could move higher, and it just simply hasn't done it. This is more about whether the dollar rolls lower. I mean, after Powell's testimony, although we're reading the story, it was indicating, hey, look, there really wasn't anything that he really offered that you could say is bearish. They said as far as newfound, but the market's just kind of pricing towards that. And from a technical standpoint, it's why we talked about the dollar, why we thought it would move to 96.08. So if the euro wanted to move higher of its own volition, it would have already moved higher of its own volition. Okay, it just simply has not moved higher. This once again isn't really about the euro. It's really about the cash dollar index, and will it move lower? So where the rubber meets the road has not changed. It's going to be 1445. You can make a case for 1406. You can make a case for 1429. But one of the reasons why the euro hasn't popped higher is because people simply don't believe it. It's been the boy that's cried wolf so many times, nobody wants to be fooled by it anymore. So even when it tried to jump up, it tried to move and made it up to in the 80s, made it up to past 92, and it quickly kind of rolled back. And here we are. When we had the chance to, you might think, okay, well, now it's got the momentum. In Asia, we could have easily taken out 1406, maybe not rallied hard. We could have got up to maybe 1420. Okay, what did we do? All we did was rotate lower. Okay, so this is really more about the cash dollar index and not so much about the euro. So once again, you can make the case of 1406. You can make the case of 1429. Look, unless we get above 1445, to me, it's all a matter of just the market just kind of moving around. It's been in this area for this length of time. It kind of moved a little bit higher. A few people, including myself, were faked out a little bit thinking, okay, we'll move lower, and all we did was trying to dip back. And really, we were doing the same thing even yesterday until as the dollar began to relinquish, then it started pushing up the euro. And even then, it was dragging brought up like dragging a screaming kid through the grocery store aisle. Just simply didn't want to go. And quickly we lost steam, and now we're here working a little bit hard. But are we pushing to new highs? No. So the bias chart resistance, the market's going to have to prove itself, is going to be 1445. Yes, there's 1406. Yes, there's 1429. But it's all about 1445. You get past that, now you're talking turkey. Okay, we covered in the analysis here. Support comes in at 1360. Yes, that's going to be support here, 1360. Let's go move into the cable. Now this is a real market. You see what I'm saying? Despite all the hijinks and constant ongoing one thing after another thing. Now this is a real market. This is how a real market reacts. Okay, this is a market you say, hey, you know what? Just like Blake pointed out, Blake goes, I think Blake had tweeted that, or even mentioned it on Face. When you look at this, when you look at that, tell me why you'd be short cable. I mean, this is a market that's really moving. It's clipping along. It's a market that tells you, hey, I'm moving along. You get on if you want, or don't get on if you don't want. See you later. The train is moving. That's a real market, not this. Okay. So once again, not to, punk on the euro, but the point is the euro is just simply moving as a de facto based on what the cash dollar index is doing. The cable, now this is a real deal if you're looking at from a technical move. Okay, so let's go and move into the cable. Cable is bolted higher, closing just ahead of the major daily level of 3268. Stops above 3300. Should find some value selling at 3342. Support comes in at 3178. followed by 31.25. So let's go and take a look here at the cable. Boy, now has this market really got moving. Now, obviously, there's different reasons why. Obviously, you can point to the fundamentals. Okay, it's not going to be a hard Brexit. You know, the chances have been reduced, and the chance of a second referendum have moved from 15% to 20% and so forth. But the thing is, the market's actually moving. And boy, look at it respond to the technicals. Now, once again, not to punk the euro, but look at this. This market comes down. We test the 50% back. We come back in here. Here's at 28.74. I think the 50% back was, if I remember correctly, 27.87. We had 74. Where you can see where these touches came from and why I love the touches and the closes here, whether it be 2-hour bars, daily bars. That came back. We broke the trend line. We get the momentum here on the exponential moving averages. The market rallies. We come back, and where do we test? A key breakout level. You see that? That was a breakout level there. We test that. We take it up by a few pips, and boy, we just start clipping along. This is a market that's really moving from a technical standpoint. Better be careful. Can't stand in the way. So where's the next level? Well, to me, I believe, you know, you take this out, which is this 33. I think we run into some pressure right here. Once again, the touches, you see this close and then low, low, right in here, a challenge just above the high. To me, it's going to come in right there at 33.44. Now, you've had a pretty good run. We actually backed off just a bit, which you would expect from a market that's really starting to clip. It doesn't give you too much opportunity. It gives you a slight opportunity from a technical standpoint. This 29.87, you can see that was key on the way up. Look at these touches, remember, as I mentioned. Close, close, right here, body close. And key because this is a long-legged doji right there. Come across here, close, close, right here, high, high. So as the market broke above this area, where does it come? Just playing perfectly from a technical standpoint. Comes back and tests this breakout area. Just takes out by a few pips and runs up higher. But we've had a pretty good run here. So it doesn't mean we can't move higher, but I'm thinking if you take out 133, anybody says, you know, I shorted it from here, I shorted from here. Oh my God, my ankle point has got to be just above 33. I don't know, 33.10, 33.20, 33.25. Well, it comes in for me right here. It's 33.43 here. Because those people that may have their stops at 33 may have them at 33.15, 33.28. So I'm thinking here at 33.43. Now, it doesn't mean we're going to stop right there on a dime, but I think you can see all this value here. Got some volume. I think that that's where we'll have some trouble. So let's go with 33.43 as our resistance here on the cable. Now looking at our analysis. Support comes in at 31.78 followed by 31.25. Let's go in. Well, heck, look at this thing. Boy, this thing is just clipping along. It doesn't want to even back off. Let's go into the 2-hour chart. Look at this thing just clipping along. Well, for right now, that would be support on a short-term basis. 32.12. Let's go and put that in place. So it's going to be right there at 32.15 for right now on a very short-term basis. I don't want to go as far back here as at 31.80, and I believe on our Asian analysis, we did put here that it comes in at 31.78. You can see that here. Support comes in at 31.78. But to me, that's with this market being so strong, it'd be a little bit tough to get to. We'll just go with the initial support here, 32.15. Well, right there. Let's take a look here with the Aussie dollar. You can see here we're struggling right here with that 71.79. We had 71.75 as our resistance. You can see this coming right across here. Closed at 71.83. Let's take a look on the 2-hour chart. We're going to keep this one here. We're showing 71.79 on it. Right here we have 71.75. We'll just adjust it for the 4 pips, but that's held up. We're actually rotating a little bit lower here, but it should be 71.79. As far as support, I think we did have this market rotating lower because we pushed it all the way down here. Not that much further, but 71.18, because what we were looking for in case it rotated lower, a move down here. You see right there? 71.18. Well, that might, at this point, that might be asking a little bit too much, so we're going to move it just a little bit higher. In relation to where it's already challenged up here, we'll probably see some buying come in right there at 71.28. So about another 40 pips lower. Once again, on the bias chart here, we're looking for support and resistance bars for today, rolling into tomorrow. Yeah, it can go a little bit beyond that, but once again, our focus in the webinar is for the day's support and resistance rolling into the next 24 hours. Hence why we adjusted just 4 pips, just a little bit higher. Let's go and move into the dollar Swiss. Well, we continue to make a move. I'm surprised we'd even come lower because you can see here it's actually holding up relatively well. Now, we did see some very poor Swiss numbers come out. The Swiss Zoo came in at, well, it's not as bad as it could have been. Prior was net minus 44. This one came in at minus 16.60. But I still believe that we're in a situation where we can still rotate lower to 99.54. And or I'm going to call it 53, but you can see that's still going to remain the same, 99.53. As I mentioned, we're not going to get caught with our pants down. We're hanging around here, holding up pretty well here if you think about it. See how tight it's holding here. But if we do slide here, that's where I think we'll go to 99.53. And we've had our resistance area at par 21. No change there. So it still remains the same. I'm going to go and keep it as bullish. Okay. Let's go on here with the dollar CAD. Now we do have some good technical review on this. Good technical, and we have some key topics I think we have to go and point to. But let's go and move into the dollar CAD. The Canadian dollar is revisiting the 31.52. Market repelled at 32.35, a level that was important for bulls to overtake. A daily close below 31.33 should result in a quick move to 30.43. Now, we had mentioned that 30.43 actually at the beginning of the week, and we really started turning things around and looked like the dollar CAD was on its way. And look, it just failed. And, you know, the thing that I tell you was kind of frustrating to me is I was a seller right there, okay? And when you look at it on a 2-hour chart, look at that. We even had this listed yesterday, you remember? This is our bias chart resistance at 32.27. And here I was getting short right there, just at 32. I think it was 31 or 32. We made this move up in here. And if you look on the daily here, unfortunately, I didn't hang on and just scalped it out. But I was active. I jumped in a few times as the market moved lower. But anyway, that being said, this was a huge area right here. Look at that 32.35. And you can see right where the market failed. I mean, I think the high was what, 32.37 or something like that. And you can see the significance. I can't say it enough how important these touches are. My analysis is not complex and pretty like everybody, a lot of other people's, but I tell you what, it's just simple. You just go with the touches. I mean, you can combine it with your own analysis with whatever you're doing, but you can see how important these closes are, whether they be on the half hour or the 2 hour or the daily. And you can see here how important this 32.35, it kept the market in check. But more importantly, is not only, oh, look, this was that we had 26 and we even had a resistance bar at 35 and, oh, look how it held the market. No, but where it's important also is it was important for the bulls. If they were to go in and come back, okay, let's pull this back. And this I thought was a few key comments, technically speaking. We'd already come back and held this 31.52. We're breaking higher. If the bulls were going to turn around, they made this rally up in here. I thought they'd make it up in here, and they couldn't even make it to the 50% here at 33.56. We had 33.54 as a level. I think it was 56 was the 50% back. Well, we rotate lower. Okay, fine. It was important. They bounced up to 31.52. Challenge it, take out the stops. Okay, we cleared out some stops, and we're on our way. It was very important from a bull standpoint to close above 32.35. You close above 32.35. Now, from a technical standpoint, you got to push harder. Let me put it to you this way. I got short. I think it was 32.31, 32.32, I think it was. But anyway, the thing is, had this market worked a little bit higher and it closed, like, let's say at 32.42 for the day, I got to get out. I mean, yes, it was a scalp. Sometimes the whole thing's a little bit longer than I should, but I got to get out because guess what? I have to respect the technicals because it would have closed on a daily above 32.35. Meaning is now maybe I wouldn't be out of the money by very much, but I have to respect the technicals because anybody else that got short from down here, okay, they've got to cover and say, you know what, we close above this key daily level. We can now. It doesn't mean we're going to take off to the moon, but it opens the door for the market to move higher. Well, we couldn't even close beyond that. And that was important. So as this market rotated low, I don't know if I think it was DK Trader. I think it might have been him. He hung on for a pretty good, nice chunk of change. There was another gentleman. I'm trying to think of who else it was. He joined me on the trade. He hung on. I think he hung on for like 40 pips or 45 pips or something like that. The point I'm trying to make, though, as we moved lower, is if you're a bull, you've got to be disappointed when you just look at this from a technical standpoint for a lot of different reasons. And that's what I'm saying. This gives you, unlike, like I said, once again, not trying to punk the euro. The euro's just, it's not doing anything. It's just being dragged around by the nose ring, by the dollar, whatever the dollar index. These markets like the cable, the CAD, they're doing something technically. Okay, so when you come down here, you come back and challenge, okay, now we're ready. We're going to start to work higher. And what happens is, and that's after the crude oil market already turned lower. So it's got everything going for it. It needed to break above this 32.34 to really start to launch and maybe eventually move higher. And the market just fell back. And then now look where we're back. I said we're revisiting the 31.52. If we break below 32.33, and there's what I was talking about right there, anybody who's a bull, just like I told you here, I was short. If the market had closed, let's say for the day at 32.45, 32.47, I got to get the heck out of Dodge because I'm in the wrong. We may eventually pull back a little bit lower, but technically speaking, we're looking on a daily. Remember, a 30-minute close is more important than a 5-minute. A 2 hour is more important than a 30-minute close, and a daily trumps all of those. So if we close above 32.40, 32.35, I got to get the heck out of Dodge. You see what I'm saying? Or else I'm going to be playing the pain game, and this thing can work higher against me, and then I'll be kicking myself in the rear saying, why didn't I just get out when I knew I was wrong? So it's the same thing here for the bulls. Anybody's bullish. You close below 32, 31, 33 on a daily close, that's it. You got to get the heck out of Dodge, and that really opens the door for us to move lower to challenge down here at this 30.43. Let's see what happens. But right now, you know, the crude oil market, although we're moving back higher again, we'd come off. We had the opportunity for this to at least to have a breakout, challenge above in here. Maybe we close a little bit lower, but breakout, we simply couldn't do it. This market is, and if you look at the exponential moving averages, still remain on sell. Everything points to this market wanting to go lower from a technical standpoint. We'll see whether it does or doesn't. Now, looking on the 2-hour chart here, where's resistance now? Okay, well, resistance is going to come in right there at 31.95. That will be resistance on a short-term basis. Now, remember, we have Canadian data today, and we also have GDP on Friday. But on a short-term basis, let's look at it right there, called 31.97. 31.97 will be our resistance for right now. I think moves at 31.97 probably would be faded at that point, because anybody that's bullish would be saying, I'll get the heck out of Dodge. I don't mind taking a minor loss or getting out with a few dollars in my hand and just see what happens after GDP, especially the way the market's reacting right now. Now, support, well, we already mentioned it. It's going to come in at that 31.33 from a daily standpoint. Let me see. Now we look on here. Yeah, right there. From a 2-hour standpoint, we know 31.33 is huge on the daily. It's going to be 31.26. 31.26. So let's look in here. Let's go into the dollar MEX. Well, this one's been all over the map, and it's held some key technical levels here. Doggone it, I always do that. Someone was getting frustrated yesterday about this. Look, the crazy thing is, remember how this is a huge 61%? This is also 61% back of this, and we turned around and moved higher. But I was looking at the Canadian dollar and a couple other things. So I still haven't had a chance to, other than a few scalps I did some time back. I've been, following this, but haven't had a chance to really stick on this dollar MEX. But it has moved around quite a bit. That being said, support, I think we're in a mixed bag right now. Unlike here, I'll give you an example. When we had let's pull this back. Remember, we were looking at this 61%, this level. I didn't think we'd pull back this far back, but I thought we'd pull back a little bit in here, maybe come back. Felt good about that, okay? I was surprised we got here this fast. I felt pretty good about here, 1911. And we talked about this dip in here. I thought we might only make it out to about 1908. Remember, the lower range was 1905, but we did come down and go all the way down to this lower zone. Saw a pretty nice rally. I mean, there was some information out of Mexico doing their own thing or whatever. Saw this rally, and we kind of bounced. Now we're in, to me, I feel like we're in no man's land. It's like coin flip time. I just don't have a good take on what this thing wants to do at all. Certainly, we talked about, and I didn't think it was going to make it down in 1902. I thought we'd probably make it around maybe 1907-ish, maybe. We could maybe stretch it down here. But we talked about there's really the opportunity that we could move down here to 1897. We've already made this stab down here, so if we roll lower, it really put the market in jeopardy. And the dollar is weaker now. I just don't have a good take on this market at all as to what it was, and it just looks like coin flip city. But that being said, we've made a rally back here, okay? And now we're just kind of languishing. Well, if you're languishing and the trend's already been lower, then that would suggest it would just move back down. So once again, really a tough call in here. Just don't have a good feel on this at all. I think you have to look at the bigger picture, and we'll go with 1906. And that's a long ways off, a long ways off. But to me, it looks like it may want to go and just resolve itself a little bit lower and clear the stops here and see if there's anything beyond that. And to me, that takes us, I'll tell you what, we'll put it right there. There's our 19077. 19077 here to clear this area out, maybe then get some limits here. So we're going to go with 19, well, it would be 19078, 19078 for support. Upside, if they do take out these stops, I don't see them going too much further. And we'll go with that 1921.8. Let's go and move into WTI. Joe was asking me late in the U.S. session yesterday about what were my thoughts in crude oil. And we're right here. You see right here, moves to, I was saying moves to $56 I think are going to be sold. And here's the reason why, and anything can change. We got data coming out. This has been one heck of a move. And you know, Trump gave his tweet, which really what we had here, when you look here, we've been talking about 57.18 for almost a couple of weeks now. A week and a half, I guess you'd call it. And there's that 57.18 we came up with. And the market, I thought we'd pause back from here only because we've gone so far and the market would need to take a respite. And I don't think that's much of a respite right here. But I thought the market was very vulnerable, especially on Monday, because we already, all the news was being baked in. So obviously then with, you know, Trump made his tweet, the S&P started selling off. It made it easy for the market to pull back. That being said, if you're long crude, and once again, look at it from a psychological standpoint, technically speaking, you know, you're long here and you're like, whoa, maybe it is time to cash the chips now. This has been a pretty good long run here, and maybe I did come in a little bit late. Maybe it's too late. That's the way I'm looking at it from a, psychologically speaking, but from a technical level, saying, wow, maybe I've come in too late. We need to see a further pullback. So my take is moves right here. You see here into this 56 area here, right in here, all this little volume area here, between here and here. I'll show you what I'm referring to. There, you see this little area here between 56 and 56.19. I think any moves back here, I guess the market will try and stretch it a little bit higher. Any moves back in here, I think people are looking to go in and get rid of and dump on the rally back, and then we have to rotate back down here. Okay? And that back down here, I think I told Joe, I'm looking for around 54.43 on a short-term basis. So I think rallies back in here between 56 to 56.20. Let's give it that extra little juice. Let's say 56.20. Support, short-term basis, we'll go with 55.04. That might be a little bit too much. Right there. There we go. You see right in here coming across? We'll call it 55.06, short-term basis. But my thoughts would be is that we're going to go down here to 54.40 right there on a short-term basis, right there. Because when you see this huge move and you see this market come off fast, I mean fast and furious, okay, you're gonna have a tough time coming back up. It reminds me of a story that Blake mentioned before too. Let's say you're on a ladder. Okay, boy, this is a good ladder. You fall off the ladder, you stay in a pretty good pullback. You don't just jump up and say, okay, I'm okay. You kind of like sit there, you lay there and like, okay, did I break anything? Is anything hurting? So the market gently starts moving higher. But once you get up in here, this area, people are going to say, wait a minute, you know, we've already had a pretty good run. And boy, look at this fall. I bet there's all kinds of stops being held here or limits here. So it's in this area here between 56 to 56.20 is. You can push a little bit higher that I think that you'll find some sellers come in. And then the market may need to rotate lower. My thing is it will eventually rotate lower to 54.40. And even then, if we rally, that'd still be about $1.80 lower here if it just stops there, 20. So that's a take on crude. Let's go and look at the dollar yen. This market was meandering, and look at this prior daily close here. This engulfed right in here. I don't care about the wick up here. I look at the body and look at that. We engulfed it. So it does open the door for lower. And the first lower is down there at 1034, which is almost made to 1034. That being said, I would not have thought that the wheels would come off the caboose this quickly. We had been talking about how the market's sitting here, and we've been saying, hey, look, this market is not going to be happy until we can take out 111, which we did. And I thought if we can take out 1103, man, we're going to 1144. That's on a 2-hour chart, 1135 on a daily chart. Well, we only made up to 1123, and boy, did we come off rather quickly. But it was that same, remember it was on Monday as the market really, S&Ps finally started coming apart. And remember, we had talked about on the S&Ps, I myself had taken a short here at 28.12. We were looking at, we even mentioned it here well before that. We talked about this market going to 28.14, which confluenced with 28.07 to 78%. And you can see the significance of the 28.14 right here. Once again, just like I always say, it's all about the touches, okay, coming across here. Look at all these touches coming across. That offered a very good area, and the market ran out of gas, and I myself took a short. I think it was 28.12 and a quarter. I didn't hang on for that long. I held on for 11 and also 11 handles and also 12 handles, but I didn't stick around too long. I certainly sure wish I could have or should have. That being said, my thought with the dollar yen was when it gets up there, here's my thing. And then once again, I said it goes back to the same thing I was saying. Boy, look at this S&P here. Man, this thing had gone to Venus. Okay, well, generally the dollar yen, to a certain extent, closely correlates with the S&P. Well, we have rallied. Let's move this here. But going to Venus wasn't my thought here, other than we had the flash crash low. My thoughts were, well, what the heck? We should be at 1187 at least, or right around, so my thoughts were, okay, we're diverging to a certain extent, negatively diverging, because it should be higher and would really open the door for us to rotate lower. Well, rotate lower we have in a big way. So where are we now with the dollar yen? Well, 1034 is going to be key daily support, but this market is really in a weak state. Maybe if the dollar weakens a little bit further, we may take a track down here and challenge 1025. So we'll go with 1025. Remember, I had a bid working there. I think it was 1024, and I came short about 2 pips, and then the market finally rotated higher. I think we can come down here and take out that 1024-ish. Maybe might even dip a little bit lower. I don't know. Let me not necessarily have today, but I think we can come down there. So we're going to go with 1024. Resistance. It's going to be right there. I don't even think it'll make it up even that high, to be honest with you. I think this is as good as it gets right here, if it does. I think you'll start to see sellers coming in right there. I mean, you can make the case right here just a little bit higher. That's really... $10.73. I think anywhere between here, 68 and 73. And 73 is right in the middle of this whole area. So let's go with 10.73. But that even might be a stretch, really, and he moves up towards there. Support 1024. Let's go and move into the Dixie. Okay, so the dollar index reached the target, the 96.08 pivot. Remember, we had that target in place since Sunday or the analysis. A rebound would be reasonable after several down days. Resistance is 96.44 with support at 95.80. Let's go and move into the cash dollar index. Now, what we've been focusing on really has been the 2-hour chart. Let's just take a look at the daily that quickly. You can see here now, we mentioned 95.80. You can also see there's some trend line support. I always put my trend lines through the bodies. You know how important I like the bodies, and I'm not much about with the wicks. So 95.80, you can see that coming in close around there. Also, you can see that right there. Look at that. See these daily closes right here, right there, 80. But the chart we've been focusing on since the beginning of the week has been the 2-hour chart. You remember we even had a parallel trend line right out here because my point was that everything points to 96.08. And we did get to 96.08, okay? And we're actually weakening a little bit here, okay, rotating. As we started to move up a little bit higher from there, we saw the euro weaken. Well, we're moving back towards lows, and the euro is really pretty much not doing anything here at this point. And why I make the case that it's really not about the euro itself. It's really only about the dollar index. Now, it's a total different case when you're talking about the cable. Let's look at the cable. We're still up in here. But the euro is just trading as a de facto for the cash dollar index at this time. But we've got 95.80 coming in here for support right there. And that's going to be our support for right now. There, you could make this move down to 95.60 if the wheels do come off a little bit off the caboose, 95.60. But on a short-term basis, we'll go with the 95 way because we did reach this pivot. Maybe we come down here, clean out some stops, and we start to work a little bit higher. So it's going to be 95.80. Once again, just to reiterate, the analysis here is for the day and next 24 hours. So yeah, can we make it to 95.65? We may go on and do that. We eventually pull down here and go to 95, but the analysis here is for today and next 24 hours. Okay. Let's take a look on the resistance. We said here 96.44. Boy, that's a heck of a jump from up here. We'd have to get above 96.44. Actually, that would start to go above the trend line, downtrend line, and get things turned lower. Well, on a short-term basis, it's going to be right there on a short-term basis, 96.31. We'll go on and put a little trend line here. All right, there, 96.31. We'll have to go and stay below this 96.08 to turn this to bearish. So we got to give it the benefit of the doubt. What's going on here to the Aussie yen? Boy, we have rotated lower here. Obviously, with the yen weakening, we've come back down here. Look at that. After really powering higher, we've made it back here, just about to 79.10, and that's a pivot right now. So let's take a look here. We're just going to allow for this to work a little bit lower, not much, 79.05. So we're going to go 79.05 for our support because I'm just going to respect the plain old technicals right here. That is a pivot. Look at that 79.10. Remember, as important as 96.08 has been for the dollar index, 79.10 has been huge for the Aussie yen. So it's going to just give it an extra 5 pips, 79.05. Oh, we actually did have, look, we had 79.04. Well, just keep it at 79.04. And we had a resistance at 48. Resistance, if we do get a little bit of a rebound, it's going to come in right there. For right now, it's going to be 79.35. Now let's go into the gold market. We're really just marking time here in the gold market. With the dollar winding lower, the gold market has the opportunity to move lower. I move higher, and it's simply not doing it right now. That sends up a yellow caution flag here. So resistance now comes in at 13.31, and it looks like we are, if the dollar eventually rebounds after, let's say it dips a little bit lower and then rebounds, we could see that sell-off we were talking about. Sell-off being that, remember, we talked about that, the market has not had the opportunity for value buying. And when I talk about the idea of value buying is we haven't had those pullbacks to say, wow, remember we talked about this 1267, we said, hey, look, the market can rotate lower, but boy, you can see a heck of a lot of buying, I believe, at 1267. We didn't even get a chance there. So the market rallies back. Boy, look, we just got the Eurozone sentiment numbers come in. 69, they came in right in line, Eurozone sentiment, and Euro's not doing anything, 13.95. But we didn't get those pullback, and so on the move from 1323. At least if we pull down to 1293, a little bit of okay value buying, nothing perfect. It's not giving the opportunity. So as it moves higher, the corresponding stops on the downside are going to tighten up because people have less available as far as their gains. So I think that we can rotate lower. Support is going to be here at 1315. I'll actually call it 1314. Still bullish, but be careful with this one. Let's go and move into the bun. Boy, we are still holding here, but you know what? There's a key area right here. Is right there, the 66.33. Right there. We got a little bit above it a little bit earlier, but the main area right here is going to be right there. Actually, it's 66. Right there, 66.34. Look at this euro, dead in the water. We get the data out and it's still dead in the water. Support for right now, 65.95 right there. 65.95 on support. And let's go into the DAX. Finally, DAX starting to behave a little bit. We had our support 11.398, and we're going to stick with that, 11.398 on the DAX. We had a resistance at 11.512. Well, we did stick around up here. We're going to move it just a little bit lower here. Well, there's 11.512. We're going to go and keep that. This is going to remain the same in the DAX right there. So we're keeping it pretty tight, although we're rotating a little bit lower now, looking for that 11.398. And so goes the bias chart. And thanks for joining us here on the European crossover webinar. I'll get this posted in the chat room. Have a great day, trader.